Welcome back. We are busy with Class 7 investments, and we're continuing now with Unit 3.2, which will deal with linked and market-related investments. That linked product managers invest funds in collective investment schemes on behalf of their clients. They do not manage the collective investment schemes. They act as intermediaries between the client and the collective investment schemes manager. LISPs, or linked investment schemes providers, are required to register with the FSCA in terms of the FASE Act. In terms of this Act, they are required to submit annual audited statements together with an auditor's report and satisfy requirements in terms of solvency and insurance cover. Linked product companies came into being in the late 1980s. Many investors were frustrated with the inflexibility of the traditional investment products. People were also becoming increasingly unhappy about the lack of transparency concerning fees and charges. The linked product concept involves the creation of several traditional investment products, such as retirement annuities, pension funds, provident funds, guaranteed products, and savings schemes. These products are then invested in collective investment schemes. Their performance is therefore linked to the performance of the underlying units. In May of 1998, the Linked Investment Services Providers Association, or LISPA, was formed. The purpose of this body is to represent its members on matters of legislation and in their dealings with other financial and investment associations. Linked product managers invest funds in collective investment schemes on behalf of their clients. They do not manage the collective investment scheme. They act as intermediaries between the client and the collective investment schemes management company. The linked product companies must be registered with the Financial Sector Conduct Authority, the FSCA, as they fall outside the jurisdiction of the Collective Investment Schemes Control Act. The Security Services Act number 36 of 2004 governs them. The UAL Merchant Bank introduced linked products to offer products that would enable investors to arrange their investments according to their needs and objectives. They also decided to give investors the power to adjust their portfolios following their changing needs. The life assurance industry had to respond to the changes in the investment market or miss a large portion of their income. Many of these companies have since launched their range of linked products in response to the threat coming from linked product companies. The linked product concept involves the creation of several traditional investment products, like we discussed earlier: retirement annuities, pension funds, provident funds, guaranteed products, and savings schemes. These products are then invested in collective investment schemes. Therefore, their performance is linked to the underlying unit's performance. Linked products can then be classified into three broad categories. The first one is equity linked endowment. It is another way that investors can buy a share in a professionally managed and diversified portfolio. Investment trusts are in fact closed-end investment companies because their basic capitalization is limited or closed. These companies sell shares to raise capital but use the proceeds to purchase securities of other companies. After the initial offering, the share on the closed-end company are bought and sold on regulated stock exchanges. Investment company shares rarely trade at asset value, but market prices either at a discount of asset value or at a premium. The net asset value of closed-ended companies is published regularly based on the market value of the shares it holds at the end of the week. By buying shares at net asset value discount, the investor hopes to increase return as the size of the discount value varies over time. It is a more complex and riskier investment than collective investment schemes. Pure collective investment scheme investment with switching facilities is the next one. Investors can place a lump sum or regular monthly investment with a linked product company. The linked product company buys unit in bulk from collective investment scheme management companies. It allows the company to negotiate better charges and switching fees with the relevant management companies, and individuals have the power to obtain. Investors can then invest in any of the collective investment schemes on offer. The linked product companies offer investors a broad spectrum of investment options under one administrative umbrella. This option offers a hands-on approach to the investor, allowing him or her the freedom to change the investment portfolio as desired. A linked product company allows an investor to switch between the collective investment scheme at a lower cost than would be applicable in a typical buying and selling transaction. If one compares the fees of a linked product with those of a collective investment scheme, the following points need to be made. Both charge an initial fee, with the fee reducing the amount obviously that's invested if the investment increases. A collective investment scheme company charges an annual management fee. A linked product company charges an annual administration fee of up to 1% per annum. It is on top of the management fee charged by the collective investment scheme. So once again, the fee is reduced as the amount invested increases. A linked product company charges a fee to switch from a collective investment scheme to another collective investment scheme of, let's say, 0.25 plus VAT. Switching within a collective investment scheme family usually is free of charge. If the investor is switching between like funds, for example, equity to equity, an investor switching from a money market or a bond market fund to an equity fund will incur additional charges as the initial front-end loading would have been less. Switching units from one management company to another is expensive, as a new set of charges must then be incurred. The third one is the typical fees for a linked general investment product would be as follows. Initial administration charges of up to 2.5%. It is reduced on a sliding scale as the amount invested increases. Initial service fees of up to 2.5% per annum. This is flexible. An annual administration fee of 0.5% per annum. An annual service fee of 0.5% per annum. All these fees would be subject to VAT. Fees do vary and need to be rechecked regularly. What are the advantages and the disadvantages of linked products? Linked products allow an investor to control his investment more easily and flexibly. In the past, an investor would purchase a fund from individual management companies. They would have the facility to buy a complete range of funds from various management companies. The popularity of linked products is due to the many advantages that they offer to investors, like low exposure to a broad spread of shares, professionally managed portfolio, guaranteed liquidity, tax benefits, long-term inflation beating returns, lower initial charges, higher degree of flexibility, a phase-in option, and then full disclosure of costs. Some of the disadvantages for an investor that may face includes the following. There's higher annual service fees, as one fee is paid to the linked product company and another is paid to the collective investment schemes management company. Abuse of switching from fund to fund by trying to time the market or following the top performance will reduce your returns. And complicated pricing structures exist and vary from company to company. Fees also vary from making standard fees a generalization, which is not always accurate. Thank you for attending this part of the session. The next one we will discuss investment trusts. That will be in Unit 3.3. I'll then see you in the next session. We will discuss investment trusts.